Hey everyone, Sean here at Warrior Trading, and today we're going to go over what a stop order is. A stop order is an order type that requires you to specify a price just like a limit order, except when your stop is triggered, it turns into a market order and is executed at the next available price, which could be above or below your stop price, depending on the price action, whereas with a limit order, you would only get filled at your limit price or better. So since stop orders are triggered into market orders, you don't have much control on what you get in or out at. Now, stops are most commonly used as a protective order versus a long or short position. So, say you were long 1,000 shares of the Qs here. They're currently trading at 140.43, and say you wanted to get out if they traded down below VWAP, which is currently at 140.23. So you would set a sell stop order for 1,000 shares at 140.23, and if prices went down to that level, it would trigger your stop and you would close your position. The same goes for if you're short. You can place a buy stop. So say if we were short here at 140.40 and we wanted to get out if it went above here at 140.52, we could place a buy stop at that level, and if prices went up to it, they would trigger it and we would close our short position. So that's how you can use it as a stop to protect a position, but they can also be used to enter a position. Typically they are used on breakout setups where a trader is looking to enter a trade when prices break above or below a key resistance or support level. So let's say you wanted to buy some Qs here if they broke out above 140.52. What you would do is you would place a buy stop just above at like 140.53. And if prices came and broke above there, it'd set off your stop order and you'd buy shares at whatever the next market price was. Since they do turn into market orders, you wouldn't have any control on the prices you got, and that's just kind of the risk you take when you place a buy stop or a sell stop order. So they can be useful, but you have to be careful using them in stocks, especially with that have big spreads or are thinly traded, because when your stop is triggered into a market order, you could lose, or you could close your position 10, 15 cents or even more below your stop price. And although that's not very common, it's still something you want to try and avoid. Now, for stocks like that, you could look at using something like a stop limit order, which is something I'll go over in another video. But all right, well, that's it for stop orders. Everyone, if you have any questions, leave us a message in the comments below. See you guys next time.
Oh, hey, I didn't see you there. Well, I was just working on the dream board for my next home run trade. Hopefully it comes soon. Until then, make sure you subscribe to get email alerts anytime I go live or upload new videos. Until then, happy surfing